You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. If you haven't had a chance to check it out, I know many of you have, but perhaps you're one of the few who's been too busy, haven't had a chance to check it out yet, then surf on over to your app store of choice, the Google Play App Store, the iTunes App Store, even the Amazon Kindle Fire App Store, and download the Options Insider Radio Network mobile app. You can, of course, stream all of your favorite episodes of the Option Block or any other program you like on our fantastic network. So surf on over to your app store of choice, download the app. You can stream everything instantly. You can download them for offline listening when you're on the go, on a plane, on a train, on a subway, wherever you like to listen to our fine programs. And of course, you can use the app to get in touch with us here on the old program. In fact, one of you just did just that today. So check it out, the Options Insider Radio Network mobile app in your app store of choice. And joining me on the old all-star panel today, we have two of our usual suspects, and hopefully we'll be joined by a third a wee bit later in the program. But starting off with the man beaming in from the house of many clocks. He is known far and wide as the Viceroy from Options Express, none other than Mr. Alex Jacobson. Alex, welcome back to the program, sir.
Hey, Mark. Good to be here today.
We are also joined by the Rock Lobster himself, none other than Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
It's a pleasure to be here. Always happy to be on the Option Block. Thrills my day, makes me happy. And I also realize, I probably get fed after this at some point. So I always know it's a nice top to my day, although today might be a skating day.
I was going to say, how do we compare it to the hot skates?
It does take an hour of my hot skate time away, I have to admit, from 4 to 5. But we only have another week to go of that, and then it'll be off to riding my bike or some other type of activity that you do in Maine.
All the fun Maine activities. And we will be joined a little bit later, listeners, by good old Uncle Mike Tusaw. He is making his way onto the program as we speak. But for now, let's dive on into our first segment, the Trading Block.
The Trading Block.
All right, and welcome back to the Trading Block. This is, of course, the portion of the program where we break down the day's worth of action on the old street, and it was another day in the green today. Most of the major indices closing up, about 0.5% or so. The Q's a bit of a laggard, only up about 0.25%. 0.1% today. But another day in the green, volatility coming off yet again as we're rolling on towards yet another weekend. People are starting to take us, perhaps, looks like VIX cash closing today, 14.06. So we're threatening to dip below that 14 handle. We'll start there. Senior G, what's your take on this this little bit of malaise we find ourselves in from a vol perspective?
Well, the thing is, the skew is not malaisey. The at-the-money vol is I would say, is malaisey. It should, because what's the realized? Below 7. So we haven't had, although it always is scary when realized gets this low, because it tends not to stay this low for a long period of time. So the skew is adjusting for that fact by, those out-of-the-money puts are getting bid up. Even some call skew is getting bid. But the at-the-money volatility is already it's more than fairly priced, I think. So I think anyway that maybe we should see a little bit of a sell-off. There's a pretty good, decent bid for all the, let's say, the volatility products, the futures and stuff like that. So it's just one of those things where I think the market is waiting for something to happen, because that's how they're pricing it.
It's funny that realized is no longer the trade. For a couple of weeks there, it was the trade du jour. Realized kind of flagging the other way this time. So we had that brief period where realized was just blowing the doors off everything. We were moving 0.5% a day or more. Actually, probably more, probably closer to 1% or more.
It's closer to percent, yep.
Now we've kind of gone back the other way. A realized moment in the sun. It is ever so brief, unfortunately. Anything else catching your eye out there with the many clients and the myriad different discussions you guys are having over there at Option Pit throughout the day?
Looking at the volatility products, looking at, high roll yield and plays for, say, like buying VXX puts and stuff like that. Noticing volatility in Apple super cheap, although it was up $10 today. A lot of cheap volatility in all the big momentum names like Facebook, Netflix, Green Mountain Coffee, all those names everybody loves. Tesla, not so much, but it's still, it seems like all those names just kind of stopped. Vol's coming in, kind of getting crushed in them. And it's at, 1-year lows, almost 2-year lows on a lot of them. So it's almost like people are buying puts, maybe because they're long and they're worried, but they're also selling a little at the money, not thinking we're really going to move very far from here. So Miss Yellen spoke today, and the treasuries continue to rally. So I have no idea what that means.
Listeners, we are also joined now by good old Uncle Mike Tusaw, beaming in from the hinterlands of St. Charles, Illinois. Uncle Mike, welcome back to the program, sir.
Always good to be here, broadcasting live from the hinterlands.
And since you just joined us, what was top of mind for you over there at RCM today? Was it Apple? Was it GLD? Was it SLV? Was it something else crazy, not yet spoken of on this program? What was going on with the BBI today, sir?
Plenty of things not yet spoken of on this program. I got a million ideas that we always talk about, but just some of the highlights of the day. Gold and silver pretty much just remaining unchanged on the day. Didn't have too much action in either of those. I did get a short put spread. The SPY rallied, so we got out of a short put spread on the way up with that, and not too much aside from that. We did roll down some put spreads in Apple in the last few days since the last show, but aside from that, not too much action today.
And Alex, what was catching your eye over there at OX?
So there were a handful of things catching my eye today, ironically, and I know Andrew talked about the vol hasn't gone out of Tesla yet. One of the major brokerage houses today put a price target on Tesla of, get this, $65. And so that generated a lot of flow.
They must be surfing on the OX social side, I think.
No, it was Bank of America Merrill Lynch.
I was teasing. I know a lot of bears lurking out there for Tesla and the OX social as well.
Yeah, the bears on social seem to have gone back into hibernation because we had a number of people who every time someone liked it just pounded them, and that hasn't happened. OX Social lately has been dominated by two topics, and one has been the expansion of the marijuana business, which I think has been a hot topic lately. And then we've got a whole cadre of Bitcoin people on OX Social, and it looks like we'll actually have a Bitcoin index this year and possibly a Bitcoin ETF. The index has been filed already. But, what was driving the market today? There were a couple things driving the market, and they're fairly large macro events. So, yeah, Yellen was in front of the Senate today, and that clearly had an impact on rates. But if you look at, and I know every time I bring this up, somebody says he's an irrelevant geek. If you look at the German 10-year today, it traded a realized 50 vol, and that has to do with a little bit of Yellen and a lot of Ukraine. And that's what we were seeing today. And I think the market got a little spooked by the, quote unquote Russian maneuvers, and now all the tough talk is occurring. But we did have that stealth rally into the close, and that's kind of the first one we've had this week. Even on the good days, we've lost momentum going into the close, and today we had that kind of stealth rally, and some of that I give Yellen credit for. In terms of our customer base, we're starting to see hedging. We're starting to see VIX call buying. We're starting to see spider put buying going on a lot. We had a handful of unusual active names today, and they were stuff bouncing through new highs or in new highs, and I'll talk a little bit about that in the Xpress Block. But today looked to be kind of a fundamental macro day, and as Andrew pointed out, vol is low. And, I'll reiterate in my experience that the biggest market events I've ever seen have come off what in hindsight was very low vol. I was watching a competitor's site last Friday, and they, as much as I hate to give credit to one of the brokerage competitors, but some of them do a lot of very good research, and they had a study up of VIX, and they talked about the 9-year average for VIX going back through the 9 years that we've just lived through. The 9-year average for VIX is 20. And when I heard that, I went, wait a minute, it actually sounds wrong. And then I kind of watched the rest of the presentation, the charts and the graphs. So 14, 14 to me still seems high, but 14 in kind of the perspective of the 9-year average of 20, 14 seems pretty modest. But we are seeing some hedging. We are seeing some profit taking. Our client is a little more likely to hedge buy puts than to take profits, especially because of tax issues and things of that nature. But business remains good. The level of new account opening remains good. The level of trading remains good. So all in all, pretty good day today.
Yeah, a lot of names that are typically hot on the OX clientele roster were hot again today. We haven't had a chance. Both of you mentioned Tesla. We haven't had a chance to really, haven't had a show really since the last big move. We were just talking about it on Monday a little bit, and it was trading around the 200 handle. And lo and behold, we go away for a couple of days, come back, and now it's trading 252, 54 close today. So up into almost 50 handles from whence we last met and spoke about it. A lot of it off the strength of this crazy bond issue they're bringing up. They're raising nearly $2 billion to build what they're referring to as a gigafactory to build their own batteries. A lot of people debating whether that's even necessary. Some people are saying there's a glut of supply. Some people are saying there isn't. But apparently they think it is, and they're capable of raising up to $2 billion to do it. So, c'est la vie. Options, of course, given this recent move, options pretty hot on Tesla yet again. ADV out there, about 155,000 contracts, doing 274,000 today. So, size activity out there on Tesla, not as call heavy as you might think. It's about 60% or so calls, but given what we've seen out there, you'd think people would be doing nothing but buying calls. We also saw another name that I know is popular over there at OX is JCPenney. That one's been moving again. In fact, today it jumped about 26%. Its greatest one-day percentage gain in 30 years. That should tell you something about what's been going on at JCPenney over the past 30 years and how exciting that brand has been and that stock has been in particular. They had a decent quarterly report, and their 2014 outlook was a little bit rosier, I think, than some people had expected. Needless to say, this is still, talking 25%, it's still a very low price name. Closing today, $7.47, up about $1.50. So that gives you a sense of where it was trading. Nevertheless, this big move resulting in some serious options volume, as you might expect. ADV out there, about 95,000 contracts, looking at nearly 470,000, lighting up the old tape. And pretty much it's another surprise given the aggressive nature of this upside move. Usually when we see that, we see a lot of options being used as surrogates to get some long deltas, these buying calls and things like that. And yet, usually the net delta bias is pretty aggressively bullish. This net delta is only 60,000 on the day plus, and the total volume is overall about 1-to-1 calls to put. So fairly even breakdown in the volume there in JCPenney as well, which is, I think, also surprising, but interesting nonetheless. And the last thing I want to mention here on the trading block, we somehow didn't hit on it last year when it was first announced. It was back in October. Goldman, we're always talking about the Goldman straddle study, but they also had a study. They looked at analyst days and see how those impact the market from a volatility perspective and also from an options perspective, how they perform. And what they found when they talked about it last October in their study of 3,800 analyst days since 2002, they found that these stocks could be moving as much, if not more, than they're moving on a given earnings announcement. And because it's not an earnings announcement, the market isn't factoring that in. So they went ahead and said, hey, you should really start buying calls ahead of these analyst days because the vol is underpriced. And if you did that between 2002 and at the time of this writing, this was late 2013, it had returned about 23% a year versus just 1% of a move in the stocks at the same period. And if you did it just at earnings over that same period, you only made 8%. So they looked at it over that time period and said, well, these calls are seriously underpriced. People should be buying vol ahead of these analyst/investor days. And the reason I bring it up again today is, A, that's very interesting, and we haven't had a chance to really chew it over here on the show. But B, our friend Steve Sears over there at Barron's today was writing about it again today because Goldman's using that study to say, hey, Caterpillar is next up on this list of underpriced vol from an analyst day perspective, and their Caterpillar closing today $96.70, down about half a buck or so. And they're saying the March 97s are where you should be piling in, that these are underpriced. They recommended them, I think, about 95 cents. They went out 95 at a buck. They're saying that they're expecting a bit of a rally, and if they expect that this rally moves north a bit, they expect these calls, you can get them up to $5. But interesting nonetheless, and we haven't had a chance to really digest any of this here on the show, so maybe Andrew, we'll start with you. What's your take, first off, on their analysis of analyst/investor days? You think there's something there? And then B, are they right in their underpriced vol pick here for the Cat 97s?
I'm pulling it up right now for the Cat. But, news is news. And, I almost sound like Alex right there. But, they need a good reason to talk up their analysts, their investment days and all that kind of stuff. Like Apple, I think one of the better examples of is Apple when they're doing these launches. It's a new product or whatever. They always bid the vol into the launch, and it gets bid higher and higher. And then whatever they announce, the vol comes crashing down. And normally Apple sells off. It happens almost every single time. So there's certainly something to these event things that can drive up stock price. Is Caterpillar underpriced for this performance? What are they paying? 95?
Yeah, paying about a buck. Yeah,
a buck for the 97s. I don't think are they? Well, they're certainly underpriced for a $5 move. But
I think that goes without saying.
I mean, anybody can figure that out. They're like, we're going to move $5. So they're just at a 20 vol. They're probably just fairly priced, although realized vol in there over the last 10 days, like the rest of the market, is it's only trading about 50. It's trading at a 50% discount to the implied. So, I mean, if you knew if you knew CAT was going to move $5, it's cheap. But relative to how CAT's been trading, they certainly look not cheap. So, but $1 and a $97 stock, $1 option is, with a week to go, I would just say it's a reasonably priced option. Doesn't look too expensive or too cheap, but it doesn't take much to happen for you to make money.
I will say this, even with Goldman beating the drum and with Barron's writing about it, only 500 going up today. So you see a basic newsletter can do a lot more numbers than that, and only 2,000 open on the strike. So I'm guessing just from the Darwinian nature of the market itself, not a lot of people buying what they're selling here.
Structured trade, if Goldman talked about it.
Yeah,
Steve is he's a very good read. Steve used to have the desk next to me at the ISE. He's a very good read, very bright guy. But keep in mind that if you're a size Goldman customer, you could have traded that structured. And I know this is going to open a whole Pandora's box, which means it would have been delta hedged in the stock. And this continues to be one of the issues. This commentary that things move on analyst days, I think, is saying two things. I think it's saying, one, liquidity is still not that good, and markets are thin, and the Goldmans, JP Morgans of the world still foster that by allowing people to trade in a structured environment. And we could do 2 shows on that. But the other thing is, CAT is one of those stocks that I hate to say this. It's like Teledyne in the 70s on the SIBO floor. It would do nothing. It would do nothing. It would do nothing. And then one earnings surprise and the thing would move $20 in 4 days, and everybody would kind of scratch their head, and half the market making community would have had, the worst year they've ever had, and the other half would have had the best year they ever had in one day. But I think the Goldman commentary, first of all, is Goldman research good? They're very good. Are they right? Forecasting $5, that's the business they're in. But they're very good research, and they're very sharp people. And I think Steve taking their research and putting it into the daily and the Saturday column is a terrific read and a great resource. But I think part of this is the illiquidity in the listed single name equity market that we're still living with.
Yeah, I think you can take or leave the actual specific CAT pick. I threw that out there because that's kind of what was making the news today. But I think the actual study is where the interesting grist for the mill really lies here, because we're always talking about earnings, different ways to play earnings, and what the volatility is doing going into earnings, free gamma going into earnings, all those things kind of centered around earnings. And we don't really cast our eye to some of these lesser known events like the analyst days and the investor call days, and how they may actually impact the market. So it's interesting to see. I'll have to go dig into this a little bit deeper. It's interesting to see that there may at least be some interesting activity worthy of note for our listeners to pay attention to, certainly if they're trading a lot of single names out there, to be cognizant of when you're trading vol ahead of these types of events. If you're a hardcore premium seller, maybe you ease up, you do a little bit more risk mitigated type of approach around these events. Or if you want to take advantage and you think the vol is indeed underpriced, you could load up a little bit too, whether you want to take the at the money call approach or do some other interesting things. I'm surprised they didn't recommend a vertical or something like that if they're so focused on that one specific move. But c'est la vie. Interesting stuff to ponder out there. Uncle Mike, what's your take on this here investor study? You going to start pouring all of your clients into upside calls ahead of analyst days?
Oh, of course. The analysts know so much, and it makes a lot of sense to do so. No, I think that with that, there's going to be short-term noise no matter what you do in trading. And so that's one thing you always need to be mindful of, especially if you're a short option trader, is that anything, let's say maybe you're selling some calls and you're just a frequent call seller, whether it's through call spreads, call diagonals, whatever the case may be, you have to be prepared for an analyst to say something and then the stock to shoot up for no reason just because some analyst says something. And I think that you need to be mindful of that. And it's definitely a big factor that a lot of individual equity traders tend to overlook.
Yeah, I think for a lot of our audience who does fall on the dark side, the premium selling side, Definitely something to be cognizant of. Maybe you are selling some vol ahead of these events that not really getting the full bang for your buck. So keep that in mind if you're one of the aggressive dark side traders we have in our audience. I know there's at least one or two of you floating around out there. All right, and that's going to do it for the trading block. And now we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, that funky tune means it's time once again for the odd block, the portion of the show where we break down the interesting, the unusual, the downright bizarre goings on in the world of options. We're going to kick things off with Axle. This is a newcomer to the odd block, ticker symbol AXL. This is the American Axle and Manufacturers Holdings, Inc. Yes, they closed today $19.46. Up about 40 cents or so, about 2.25% on the day. This is the name that does about 700, 800 contracts a day. Not really lighting up the old tape, except for today when they did about 17,000. And pretty much, about nearly 15,000 of those 17,000 contracts came in one, surprise, out of the money call purchase. We're rolling on out to April here. The April 20s went up nearly 15,000 times. When we wrote it up this morning, it was 12,942. By the end of the day, 14,675 of these Ape 20s went up. They were purchased, a lot of them in small blocks, lifting offers for a variety of prices. Started off 65 cents. When we got 15,000 people piling into the same strike, that price is going to go up. They ended up at the end of the day closer to 95 cents. Open interest, just 378 contracts, so this is all opening paper. No earnings this cycle, so not like we're seeing someone piling in ahead of earnings. This looks like, on the surface at least, some standard size opening near out-of-the-money paper. Signor Giovinazzi, is that your take as well, sir?
Yeah, I'm watching them just kind of piling and buy these calls. The volatility kind of stopped going up in there. I mean, it kept inching up. I don't know. I guess Axle makes, drivetrain components and stuff. Maybe they're making the drivetrain for the those 1 million Teslas that are going to come out over the next couple of years, something to justify that lofty stock price.
Yeah, if they can get a piece of that $2 billion financing, I think they'll be sitting pretty.
Yeah, they're just buying them. So a very, I would just say, a bullish call buy, but not quite. Maybe this could be like, don't this Axle? They make stuff for Caterpillar. Maybe this might be on the back of that Caterpillar conference day. I'll bet you, this Axle company makes drivetrain stuff for Cat. Maybe people are buying calls. They read the Barron's article and somebody got really clever and said, well, we'll just buy this really low volatility stock and see if these things can't really just jump to the moon.
Yeah, this is where Goldman is actually playing. They're talking up Cat, but they're really buying 15,000 of these things. I know, Alex.
I mean, the size makes more sense, but I don't know who Axle's big customers are, but because I've never really, it's one name, never really looked at, but they design and validate driveline and drivetrain systems and related components for light trucks, sport utility vehicles, passenger cars, crossovers, and da-da-da-da-da. So quite possibly that could be their MO.
It's the old bait and switch. You guys buy these March 97s, and then we're going to actually buy these guys over here.
And we'll buy these Axle things because the whole industry is going to start ripping.
I am surprised more of the Lemmings didn't pile into those Goldman calls. 500, you think Barron's writing about it and Goldman beating the drum for it. More of the Lemmings would have piled in. Hey, maybe the audience is getting more sophisticated than I'm giving them credit for, which is a good thing.
Yeah, they're like, oh, really? So it's that easy?
But understand compliance. When the Goldman analyst talks to Steve, the customers have had it already. Customers have to get it first. So they don't front run their own customers. So again, kudos to Steve, but that news is a couple days old already by the time Steve gets it.
That's what I'm saying. I mean, even still, if you factor that, it's only 2,000 open on the strike. So it's not like it was a size action on that strike by any means. It was kind of just a whimper.
I'll bet you there's 30,000 on Goldman's books.
I like it.
That's speculation on my part.
Alex is purely hypotheticating.
All right. Next up here on the old odd block, we have CBL. This is CBL and Associates Properties. This name closed at $17.70, down about 1% or so on the day. Another name not exactly lighting up the old tape on a daily basis, doing about 500-600 contracts a day, doing nearly 17,000 today. And again, the bulk of that coming in one size trade. Looks like a size closing straddle sale. Let me say that all quickly. We saw about, when we wrote it up, about 5,500 or so each going up of the March 17 half calls and puts being sold for about 85 cents and about 25 to 30 cents on the put side. Given the size of the blasting out, that price went down throughout the day. By the time the end of it went out, they went out 55 at 65 and 30 at 45. So a little bit of a bid on the puts because the stock sold off. But other than that, total of about 7,000 and 8,000 of the puts, 15,000 total of these straddles on the day. Open interest, 7,000 and 8,000 on each strike. So surprise, surprise. Looks like a closing sale. Senior Lobster, what's your take here? Someone blasting out a lot of straddles here in CBL.
Yeah, again, very curious, not earnings related. There was a lot of open interest. Stock didn't move much. Now, it did make a pretty big move from like 15 up to this level. So, it looked like they were hitting the bid on these. Volatility got crushed, so obviously they were selling it. And I can't imagine they own the straddle from when the stock was a lot lower. It moved to the strike, and then you sell the straddle out. That's not normally how you do it. That's sort of the backwards way. So very curious paper on why they were selling. The only thing I could think of is, there was some volatility in there, and paper came in to hit it because earnings were later. So again, looking for maybe Yellen related because it's a REIT. So it's kind of real curious. It's a very large, curious order. And owning the straddle and then blowing it out, it probably wasn't purchased more than a few days ago, I would have to guess, because we're kind of right at the strike here for the last 3 or 4 days. So I could have gone back and looked for volume. But again, somebody just sort of bailing, like they thought they were going to get a move and they didn't get the move, so they cut it. Now, it didn't go up as a spread. It just went up as different contracts. I mean, big size, pretty good size contracts relatively to, within a couple of minutes of each other, but didn't go up as marked as a straddle.
It looks like, looking at the strikes around it, there might have been an iron fly this guy put together, because there's 5,000 open on the 15 puts and the 20 calls. So maybe he financed it with the wings and he's just closing out the guts now and just keeping all those shorts. Maybe he decided, I don't want to be long all this premium anyway. I'll just keep the short strangle at the end of the day. Maybe he bought the guts just to keep his risk manager happy, and now he's quietly closing it out. He isn't really going to be long all that premium.
But confusing, an odd one for the odd block for sure.
Indeed, an odd one, and we'll file that other one earlier, that size upside call by an axle there. We'll file that one to be watched. We'll come back to it in a couple of months and see how those calls fare. But in the meantime, we're going to keep on rolling right on into our next segment, the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is where Alex gives us a virtual satellite tour from Casa Jacobson, beaming in all the way to OXHQ. Alex, what was going on? What was catching your eye? What was lighting up the old scene over there at OX today?
Yeah, I have to put the brandy snifter down. But for everybody in San Francisco, it has Coke Zero in it. A couple of interesting threads going on today, and we talked a little bit about it earlier. We are seeing VIX call buying, which is clearly a hedge trade, so people are getting nervous. And at the same time we see the VIX call buying, we see the spider put buying, and that's been going on a lot lately. The traditional names, as they say, Twitter is the new Lulu at OX. Ironically, Lulu has had some trade lift in the last couple of days. Lulu was very much a living dead stock, having dropped from the 70s down to the 50s, but it's had about a $3 or $4 recovery in the last few days, and that was lighting up the tape. Another name that was interesting today is we had a couple customers doing size Schlumberger puts, and that seemed to be a trend today. So I may have been a newsletter, may have been some research that came out, but the tone continues to be good. I mean, the industry was banging at the 18, 19 million level late last week, early this week. That's come in a little bit, but the volume we're seeing in the Twitters and the Facebooks and the Teslas, Apple had a $10 trade lift today. Overall, it was a busy day, but we are starting to see some hedging, which means our client base is getting nervous and the clocks are going off. And also means the premium sellers we have in the OX community kind of thin a little bit in this environment. But busy day, good day overall. The futures guys have been doing a lot of interest rate business. Gold has perked up again, and the energy complex just continues to be busy throughout. So that was the day at OX today.
All right. Thank you for that, Mr. Viceroy. You may now return to your brandy snifter, and we shall keep on rolling right on into my personal favorite segment of this show, which is, of course, your segment, the Mail Block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, everybody, welcome to the Mail Block. This is, of course, the portion of the show where you guys get your chance to sound off here and join us on the old all-star panel. And first up, we have a question for you, actually, Alex. This one right up your alley. It seems like we get a question like this, I don't know, every 6 months or so on the show. Someone from OX has a question doing a particular style of trade. Seems to always fall into the ratio category, and this is the latest we have on that front. This is a question from Mr. Concerned Spreader. He writes, I have a question for the Mail Block on the Option Block program. I would like to know if there's a special procedure for entering ratio-type spreads on the OX website. Whenever I try to enter any spread trade, even from the Xspreads ticket, it always defaults to the same size for each leg. When I try to change that, it gives me a pop-up saying that each leg must be the same size. I wanted to buy some calls, but I didn't have enough capital in my account to also sell the equal number of puts to finance them. So he wanted to do a risk reversal, didn't have enough in his account to pull it off on the same ratio. So on the 1-to-1 no ratio style trade. He goes on to write, I tried simply adding a leg to my call trade ticket without success. I tried the combo, straddle, butterfly, and condor tabs in the Xspreads ticket, also with no luck. I suppose my only alternative is to execute the leg separately and then incur multiple ticket charges. Perhaps OX needs to add a ratio tab to the Xspreads ticket. Please let me know if I'm missing something obvious. Well, Mr. Alex, as the most well-versed amongst us here on the OX web tools and execution tools, what is our friend Concerned Trader missing? What is, I guess, for everyone out there who's listening who has a similar question, what is the easiest way to do a ratio if you're going in using the OX website?
So there are two questions embedded in that, and one is the capital question, and we're not going to solve that here. But,
yeah, we've been down that road.
Yeah, but here's the secret, okay? And this is just for the listener. Don't tell anybody else. If you want to trade a ratio, get off the Express Trade tab, go down a couple tabs to the all-in-one trade ticket. Format, even if you're going to trade the risk reversal, format any multi-leg strategy. So, for example, in Idea Hub, we put up the Iron Condor, the multi-leg strategy, and it formats the all-in-one trade ticket. You can adjust the all-in-one trade ticket any way you want. So, for example, if you want to do the risk reversal in the all-in-one trade ticket, put up an Iron Condor, okay? Zero out the two legs you don't want to do, change the ratios, you can do that, and then get this. And again, this is secret, don't tell anybody. Then open up the walk limit, and you can have the spread in a ratio and worked by the OEX technology. So if you want to do a 1x2 or a 1x3, get out of the Xpress tab and go into the all-in-one train ticket, format it there, and then let walk limit do it. And I know some of you are saying, but I don't want to trade the butterfly. I want to trade all those legs. Zero out the legs you don't want to trade. And it's cool because then you get the all-in-one trade ticket and you get the walk limit, which will work the order. And it sounds like the listener is a pretty savvy trader who's going to, the challenge is not only do they have difficulty entering what they want, but they're probably going to work it a little bit. They're probably going to try to do it mid-market, cancel and adjust it. Let the walk limit do that for you in the all-in-one trade ticket, and your problems are solved.
And listener, I can confirm I was playing around with the tools while Alex was talking there, and I tried the Express tab, like you said, the Express spreads, and I got the same exact pop-up you did. Then I went, like Alex said, I went into the all-in-one trade ticket. I just pulled up, I think it defaulted to Ford for me, so I pulled up a strangle here. On Ford, I changed the legs. I was able to pull up a ratio on Ford, no problem. So try the all-in-one trade ticket. That does seem to be the solution. For all of you guys out there listening, you guys love ratios for whatever reason, so that's how you do it. We should put this on the title somewhere. This is how you do ratio spreads, so it'll save us from having this question again in a few months, because I know we inevitably will. Next up, we have a question. Oh, Mr. NTaleb. I didn't know Mr. Black Swan himself was listening to our show. He writes, why do you think so much options unusual activity is focused on calls instead of puts? There are just as many negative surprises as positive surprises lurking out there. Good question. Mr. Taleb, I'm assuming you're not Mr. Black Swan, but perhaps you are. And yes, something we talked about a lot on the Odd Block. You know, a lot of our unusual activity, 70, 80% of it, maybe more, is focused on that out-of-the-money call buy. That seems to be the trade du jour amongst the quote-unquote insiders or people who think they're insiders. So, Mr. Giovinazzi, what's your take here from Mr. Black Swan himself?
I think, well, part of the problem is just noticing or having that unusual activity come to your attention. So the thing is, it's just there. As I look for unusual activity, just to see those odd looking put purchases, I don't see that many. Now I know there's surprises, but I think a lot of the surprises, honestly, are kind of catching people off guard somehow, and they're just not going in there buying puts to give in the kind of size to give me at least to me, the way I'm looking at it. So that's how I think of that anyway. It's just there. It seems like the savviness more is toward the upside, and the market tends to skew bullish anyway. So those put surprises, and plus when you see puts and somebody kind of crawls into puts, people take notice of that. You know what I mean? If somebody trades a huge block of calls, well, he could have sold them, he could have bought them. But in general, when somebody's buying puts, way out of the money, or they're trading way out of the money, normally, you sort of default to, somebody's buying those puts. Tends to drive more red flags than the call trades.
You think the puts are more noticeable? They probably are, just by virtue of the fact that there are so many fewer of them than there are the calls. They are more noticeable. The calls are kind of just par for the course now. They go up every day, multiple times a day. Whereas how many times have we done deep out of the money put buys here on the show? Not that many.
Right, and they just don't trade a lot. I mean, because I definitely would see them because they would stick out volume wise, but you don't get those. You just don't get that kind of paper.
Not to say those trades don't go up. I certainly remember A lot of them seem to go up in the index for whatever reason. I remember being run over by some insiders on puts in the SPX a couple of times, including when Rubin stepped down from Treasury Secretary and a few other things. Someone had that news a little bit ahead of everybody else and picked off a lot of people in the pit that day. So these negative surprises do come out, and people do get ahead of them and pick them off for a variety of reasons. But yeah, it does seem to be, he mentions, I don't know, I'll have to look at the data too, see if he's right about there are as many negative surprises out there as positive surprises as well. That's an interesting debate point in and of itself.
If it is Taleb, he would know.
Yes, you're right. He would know. Alex, anything you want to add to this before we roll on into our final question/comment here?
Yeah, this comes back to the SEC study of qualified contingent cross. And I think many of these call trades are convertible hedges or the manufacturing of a structured product, which is why you see it more in calls than anything else. The industry still has a very inefficient convert business. The reverse convert business, which would have used the put, is there, but it's not as big. But I know when the SEC studied this, a huge proportion of these trades could actually be explained as not being what they looked like. When the SEC looked at qualified contingent cross, I think it was 2/3 or 70% of the blocks over 1,000 were tied to something. And a lot of that is either the convert, somebody arbing the convert, or somebody manufacturing a structured product. So there's a natural bias to calls. I mean, the industry trades in equities three times as many calls as puts. Ironically, in the index, the industry trades more puts than calls. It used to be about 1-2, 1-3 to 1. So some of it is kind of the natural activity, but some of it is related to the hedging and structuring of a lot of the stuff that Wall Street trades that has an option embedded in it.
Some of it is also our friend Mr. Taleb talking up Black Swan and making people buy out of the money puts in the index in just ridiculous numbers. But
there you go. The guy's been right twice in
exactly.
30 years.
Exactly, and that's all it takes. A good point. You're right. The convertible stuff, we don't obviously have access here, at least on the show, in a reasonable time frame to look at what's going up OTC and structured as well. So it is possible a lot of these out of the money calls we're talking about could have some other leg somewhere that we're not seeing. So bear that in mind, listeners, when we're lighting up some unusual activity. All right, and last up here, more of a comment comes from Shy Tim. Maybe I'll call him Shy Tim. He's a Chicago guy. I'll just assume that. And it's not Chitem. He writes, just use the app to listen to Option Block during my flight to San Fran. Well, congrats, Mr. Chai Tim. I'm glad it worked for you. He goes on to write, I always had problems streaming your stuff on my HTC One because Android sucks for streaming podcasts. But this worked like a charm. I downloaded it ahead of time and was ready to go when we took off. Definitely preferable to the in-flight movie. Also, why does Andrew always sound so surprised to be on the show? Keep them coming, Shy Tim. I'll let Andrew answer that second part himself, but the first part, that's actually one of the reasons we did this, Mr. Shy Tim. I know iOS has a built-in podcast infrastructure. It's very easy to get those on those platforms, but Android is exploding. A lot of people, some studies say half or more of the smartphone audience is Android. And you're right, there is no centralized podcast store / directory for Android. So you were kind of left to your own devices, quite literally, depending on what device you had. So we get people writing in all the time, hey, I have this device and I have this particular podcatcher or feed reader and I want to try listening to your show and this show episode isn't working or whatever. And we spent a lot of time really troubleshooting that stuff to the point where it got ridiculous. And so we finally said, instead of trying to solve every problem on every device and every platform and every software on Android, of which there are legion, we'll put this app together, and that will give you guys kind of the one-stop shop. So that's what we did, and we're glad it works for you there on the old HTC One. Now, the salient question, Mr. Andrew, why indeed are you so surprised to be on the show every week?
Well, when you have just such a nice radio program like this to come in and be a contributor on, you're always surprised to be invited back week after week.
There you go. Well said, sir. Well said. All right. And that is going to do it for the mail block. And now we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right. And welcome to Around the Block. This is, of course, the portion of the show where we tell you what we're watching for the rest of this week into the weekend. Perhaps we'll start with you, Senior Lobster. Do not be surprised when I toss it to you. I'm giving you fair warning. What are you watching for the rest of this week into next week?
I'm trying not to sound surprised, but somehow maybe my voice just lends itself to.
You have that natural surprised cadence to you.
That natural surprise. As a floor trader, I definitely was not like that. What I'm watching, the curious sort of disconnect between how we're moving and how the skew is priced. I always know skew is forward pricing, essentially. So somebody out there somewhere thinks we're going to go for a big dump soon, market-wise. So I'm, again, keeping my eye on that. Volatility did come in a little bit today, but the actual curve sort of bent upward. So there was still demand for options, even as the at-the-money came in slightly. So I don't know what the big shoe to drop is. Maybe this Russian stuff, tough talk, but Putin just says he's not going to invade, which maybe everybody just figures that he will. He doesn't have the Olympics anymore, so he's got to find something else to do. But I find that, the disconnect between realized and implied to me right now is a little strange, and mostly because I think nobody can get used to the idea of equities being up here at this level as being normal. I think, did we make an all-time high again today or close to it? So yeah, because I have the S&P 500 at 1854 close, the SPX. That's got to be close, right? Nope, not at four handles away. Actually, you know what? That's a closing high today. So, obviously, people just can't get used to the market for whatever reason at this level. And I find that curious. I find that's the bottom line, right? I find it a little strange, and that the volatility is just not going to come in at all. So, that's kind of what I'm waiting for. I'm sort of looking at either the vol's going to move hard up, because whatever is going to happen relatively quickly, or the volatility starts sliding down. I mean, there's a lot of decay going on at this level with the market not going anywhere. So
thank you for that, Mr. Surprise. And now, Mr. Tusa, do not be surprised, sir, when I toss it to you. What are you watching for the rest of this week into the weekend, sir?
Oh, is it my turn? Ba-bum. We are right close to the all-time highs. So as I've said before, it's never been a better time in the history of the entire S&P 500 to sell your S&P shares than right now. So I'm going to continue to watch to see if we can end the week on a new all-time high. I think tomorrow's going to be a pretty key day for it because of the fact that we're so close to the all-time high. So I'm expecting some movement tomorrow. I think this is going to shape out to be an interesting week, one way or the other.
Take us home, Mr. Alex. What are you watching for the rest of this week, sir?
Almost missed the clocks. They're just finishing. Volatility in the sovereign debt market is astounding. It's astounding. I mean, as I said, the German traded a 50 vol today. The UK traded a 30 vol today. We're trading a 15 realized in the 10-year. So there was clearly a rush to quality today, everything but Asia. And that seems to me to say the Ukraine. And I think we're going to be watching that. And the clocks, that clock may have to die. The market wants to go higher, but I think this issue of what's going on in sovereign debt is what's going to hold it back, which means if the Ukraine settles in, this market's going to roar higher. VIX is going to go to 12, and we will see new highs. We may see 1,900 or 2,000 on the S&P this year. But Ukraine and Venezuela.
Thanks to all of you for joining me here on the old All-Star panel. Before we go, really quickly, let me check in with each of you, see what you guys have cooking, what's going on in your necks of the woods that may interest our listeners. Starting off with you, Mr. G, what's cooking in the land of the pit?
We have how to sell puts in an ugly market, which we could have if the Ukraine, which is hard to believe, the Ukraine is what's driving the vol up, but it had to be something because I think Treasury's made another all-time high. So anyway, it still kind of shocks me, but that's what it is. You trade the market you have, not the one you want. As far as March 8th is the date, I believe, for it is March 8th, Saturday, March 8th. Just smarter ways to sell puts. There's kind of good ways and bad ways, and or controlled put trades to get long, essentially. So there are a lot of parts of the market that are still kind of struggling, like the REIT sector, coal, other things like that. I think there's some, like I said, when I was doing a gold class last night in 1987, the Dow was the bottom of the crash, 1,700. That's right, 1,700. So why wasn't anybody buying it then? I don't know. I guess nobody had any money. They all popped in the next day. But at least for that particular day, that was a buying opportunity. So one of the key things about, being able to buy, I think the best way to make money in stocks is to buy things when nobody can. So that means you have to keep money aside and just accept that cash is a position. So we'll be talking about that a little bit in our webinar on the 8th.
Let me just save you a lot of time, Andrew, and just say, you just blast out all the little delta puts you can for max margin capacity, right? That's the best way.
That is the best way to be really right until you're really wrong.
That's what you should call it. Really right until you're really wrong. That'd be a good name. Good title for the webinar. All right. And speaking of webinars, Uncle Mike Tusaw, what's coming up on the old RCM webinar train?
Well, we have Mr. Mark Sebastian doing a webinar for us on Tuesday night. March 4th is our next webinar. He's going to talk about the dangers of the credit spread. And I'm making him do a webinar with the credit spread in the title. But since I put dangers in there, I think that is what had him do it.
That must be deeply offensive to him.
So nonetheless, stop on by, folks, rcmwealthadvisors.com/webinars to sign up.
All right, and last but certainly not least, the clocks are done, so he is in the clear. Mr. Viceroy, what is coming up in the land of OX edumacation?
Yeah, now the cavils start barking. So many webinars, my head spins when I go to them. I'll just showcase a few of them. Tuesday, March 4th, we're going to be talking theta and how to better understand it. Wednesday, March 5th, the futures guys are going to talk interest rate futures. And then the technical analysis crew is going to be talking RSI and stochastic RSI. Thursday, March 6th, Marty Kearney, my old buddy from the Options Institute at the CBO, is going to be doing a weeklies webinar with us. And then live events coming back March 8th, Saturday in Crystal City outside of D.C. Jimmy Ruzan, former Group 1 market maker, will be doing his half-day, three-quarter-day live presentation. But if you can't make it to Crystal City, everything is also done virtually now on the website. So if you're one of my neighbors sitting home in Deerfield on March 8th and you've got the hot chocolate, the slippers, and the Cavalier in the lap, you can participate on a virtual basis. And the cool thing about the virtual is you can ask questions and interact with the crowd that's there in Crystal City and Jimmy and his crew. I haven't put up my March webinars yet, but I'll be introducing two new ones. I'll be introducing a dedicated walk limit webinar in addition to the Idea Hub that I do. And a new webinar, we're just going to cut the premium harvesting part out of the option strategy spectrum and talk about put sales, credit spreads, and iron condors. So those be coming. I'll have those dates shortly.
All right. Thank you, Alex. And on behalf of Alex and Andrew and Uncle Mike and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this show, and, of course, for sending in such great questions. Keep them coming, and we'll see you next time right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.